Yesterday, the South Korean equity market experienced a severe capitulation event, with the KOSPI falling 8.29% to close at 7,484.41 points, and the KOSDAQ declining 9.08% to end at 911.41 points. This synchronized sell-off triggered both trading sidecars and full circuit breakers during the session, as the rising stock ratio on the main bourse plummeted to the 4% threshold. The primary objective of this briefing is to analyze the structural valuation gap created by this panic, particularly in light of the subsequent recovery seen in Western markets overnight, where the Philadelphia Semiconductor Index rebounded by 5.61%. Quantitative indicators suggest that local prices have drifted significantly away from global fundamental baselines, creating a rare entry point for systematic capital. The underlying catalyst for this global volatility stems from recent macroeconomic data out of the United States, where a strong non-farm payrolls report triggered renewed concerns regarding inflation stickiness and the potential for further monetary tightening by the Federal Reserve. Following this data release, the United States 10-year Treasury yield advanced to 4.56%, while the U.S. dollar index strengthened to a reading of 99.98. Data from prediction platforms such as KOSPI confirm that market participants are pricing in an extended period of elevated interest rates, with expectations for rate cuts being pushed further out into late 2027. This restrictive global monetary environment has reestablished a strong macro-driven risk premium across major emerging market assets. This macro tightening rapidly transmitted into the domestic market via the foreign exchange channel, forcing the dollar-won exchange rate to breach the 1550 level during intraday trading. The exchange rate eventually moderated to close at 1530.50 won after foreign exchange authorities issued strong verbal interventions to combat speculative position. From a flow perspective, this rapid currency depreciation acted as a mechanical trigger for passive global index funds, forcing programmatic capital to reduce absolute exposure to South Korean large-cap equities to mitigate currency translation risk. Consequently, the domestic market suffered from localized liquidity flight, despite stable domestic credit conditions. While domestic semiconductor names suffered historic declines on Monday, the global tech landscape staged a robust reversal overnight. The Philadelphia Semiconductor Index advanced by 5.61%, with all 30 constituent companies closing in positive territory. Micron Technology rose 9.87%, and Intel advanced 11.19%, driven by the recognition that underlying infrastructure demand remains intact. Because the South Korean market was closed during this recovery, a substantial pricing mismatch has opened up, leaving the domestic hardware sector fundamentally mispriced relative to its global peers. Following Monday's forced liquidations, the KOSPI's 12-month forward price-to-earnings multiple compressed to the 8.0x level. Long-term valuation metrics provided by Eugene Investment confirm that an 8.0x forward multiple places the domestic market within its bottom 10% historical percentile since the year 2005. Historical backtesting demonstrates that purchasing the KOSPI within this specific valuation tier yields a 91% probability of positive returns over a 6-month holding period, rising to a 100% win rate over a 5-year horizon. While current consensus forecasts project an implied fair value for the KOSPI at 8,880 points based on normalized earnings, the current price offers an exceptional margin of safety. An analysis of market microstructure reveals that institutional investors, particularly within the financial investment sector, driven by automated risk mitigation models, executed 2.54 trillion won in net sales on the KOSPI. This aggressive selling skewed the futures market, driving the KOSPI futures premium into a deep backwardation of minus 1.45 points. This structural imbalance points to severe short-term oversold conditions, indicating that any stabilization in global sentiment will likely trigger an immediate unwinding of these short positions via programmatic program buy orders. Yesterday's trading session showcased a clear bifurcation in behavioral patterns between institutional and retail participants. While institutional programs were indiscriminately unloading assets, domestic retail investors displayed significant resilience by absorbing 2.72 trillion won in net purchases on the KOSPI. This pattern was highly visible in individual large caps. Foreign investors net sold 361 billion won worth of Samsung electronics, whereas retail buyers counterbalanced this with 1.45 trillion won in net inflows. Historically, retail capital concentration at major valuation troughs has served as an effective psychological cushion against extended downside momentum. In contrast to the broader market decline, Naver advanced 9.20% due to an important strategic pivot into the high-margin enterprise infrastructure market. The company announced a formal roadmap to construct a 1-gigawatt hyperscale AI factory footprint by the year 2030, transforming its data centers from internal processing facilities into commercial infrastructure nodes for the Asian and Middle Eastern markets. This shift from a capital-light consumer internet business to a capital-intensive utility model provides a highly predictable, long-term B2B revenue stream that is insulated from near-term macroeconomic cycles. The financial execution of Naver's AI factory project involves an estimated total capital expenditure of $50 to $60 billion. To preserve balance sheet stability, initial funding will be supported by strategic partners, with subsequent phases funded through special purpose vehicles and external project financing. Technologically, Naver is integrating NVIDIA's advanced data center scale architecture and has joined the elite Nemotron alliance alongside top-tier global artificial intelligence firms. Projections indicate this expansion could generate an additional 20 trillion won in revenue over the next 5 years, with projected operating profit margins settling in the high 20% range. Our updated 24-hour quantitative model utilizes a Bayesian framework that incorporates yesterday's forecasting errors to adjust near-term volatility parameters. The model assigns a 50% probability to the base scenario, where the market stages a steady recovery driven by program short covering, and a 35% probability to the bull scenario, which assumes aggressive foreign active inflows matching the overnight Western rebound. Combined, the model projects an 85% probability of an upward technical adjustment for the KOSPI within the next 24 hours, while capping the bear scenario at a 15% probability due to the strong historical support at current valuation levels. Based on our quantitative findings, we recommend an immediate portfolio reallocation towards specific high-conviction assets. We advise an overweight stance on large-cap hardware pillars, specifically Samsung Electronics and SK Hynix, to capture the valuation gap relative to their U.S. peers, alongside a concentrated position in Naver to benefit from its structural infrastructure narrative. Conversely, we recommend an underweight position on cyclical exporters, such as Hyundai Motor, which remain highly vulnerable to high global interest rates and potential currency drag. In terms of execution timing, buying should be deferred until 60 to 90 minutes post-open to avoid early morning volatility and capture stable programmatic flows. To account for the elevated VIX reading of 21.5 and the upcoming domestic derivatives expiration, our model restricts the total recommended portfolio exposure to 55% of capital. We establish a hard, price-based stop loss at KOSPI 7,350 points. A breach of this level would signal a deeper structural liquidity contraction, requiring immediate risk reduction. Capital deployment should be strictly managed through time-weighted tranches, investing 20% during the mid-morning stabilization window and allocating the remaining 35% only after confirming sustained net buying from foreign institutional accounts.